Alright, so I want to show you two emails I got today from two different brokers that I use to manage my cash. And let me know if you spot something they have in common. So the first email I got was from Betterment. So I took a screenshot of it. So it says, "We understand it's been a challenging week for many people, and we want you to know that Betterment operations have gone on uninterrupted. In fact, the only change to our mind has been how we might improve your service. In light of recent events, the value of FDIC insurance has become even clearer. That's why we're increasing the FDIC insurance coverage amount for all cash reserve accounts. Our FAQ below explains how we do this. As of today, customers will be eligible for up to $2 million in individual accounts, $4 million in joint accounts, in FDIC insurance once funds are received by our program banks. This increase happened automatically and won't affect the cash reserve rates, currently 4% API, and other benefits, no fees, and unlimited withdrawals." So that's from Betterment, a wealth management or robo-advisor investment company. So they're saying they can now insure your money up to $2 million for individual accounts while still giving you 4% APY. Now that was the first email I got. The second email came by a little bit after that, and it's from our favorite friend, Robinhood. So what does Robinhood says? "Your money is protected by up to $1.5 million in FDIC insurance. Hi DGen, because you are enrolled in our Cash Sweep program, you have up to $1.5 million in FDIC insurance on your brokerage cash through our program partner banks." Now, this is a very similar language, right? Program partner banks. We'll go into what that means in a bit. The Cash Sweep program sweeps your cash to the banks where it becomes eligible for FDIC insurance. These partner banks include Goldman Sachs, Wells Fargo, Citibank, and HSBC. It's funny, two of those banks on that list have been involved with the cartel, some shady business. Your money is eligible for 6 times the standard FDIC insurance because each of our 6 partner banks carry up to $250K FDIC insurance. So that's about it. And that explains it, right? So they're saying, okay, if I put all my money into, let's say, Robinhood, they can insure it up to 6 times the normal FDIC insurance. So FDIC insurance, let's say you put the money in your cash saving in your bank, they'll insure up to $250K. But if you put in Robinhood, since they use 6 different partner banks, then you are insured up to 6 times. So that means you are insured up to $1.5 million in total. So it sounds really good, right? So what is happening? What is happening here? Why is these companies all of a sudden giving us extra assurance that our money is safe in their banks, right? Why are they doing that? Well, if you know what happened in the news this week, is that they want to prevent bank runs. The government probably instructed these businesses to assure that their depositors, that their money are safe. So they had to write these emails to people and say, hey, don't worry, we will insure you up to a couple $1 million. So for the average Joe, I'm not a millionaire. For an average Joe, you will have enough money. You should be good enough. All your money should be safe. So there's no reason for you to pull the money out. But the reality is, all of these brokerages, all of these advisor companies, like all these money management companies, they do not have the liquid to handle everybody's withdrawal. So if all of their customers today go to Robinhood and hit the withdraw button, they will not be able to pay out to everyone because Robinhood used those money to buy treasuries. They do the same thing as the banks that collapsed it. So they are not able to handle withdrawals. Even a 10% withdrawal, they will not be able to handle it. If 10% of people withdraw money, they will not be able to handle it. So that's when FDIC will have to step in and try to protect people from their deposits. I mean, this is really, really telling, and it really tells us, right, how the banking system is really in a panic mode right now. So they're trying to calm the fears so that whole house of cards won't collapse. So it's really important to keep up with the news to see if the panic becomes even greater. If it does become greater, then even this will not be enough to help people because if you have one bank collapsing, another bank will probably follow, as we can tell this week from Silicon Valley Bank, and then First Republic, Silvergate, all these banks. So that is what's happening right now, and they're trying to calm you. It is good that FDIC is there to insure you, but FDIC's fund is limited. They will not be able to insure every person in the country, every person who has money in the bank. So that's also something to keep in mind. And if they don't have enough money, what is the government going to do? No, they're going to print more money, and when you do that, you're going to have higher inflation. And Powell is going to stop his rate hike. He's currently stopping his rate hike to deal with this bank problem right now. So we will probably see a slowdown with the rate hike, but that means inflation is going to go up. So in the end, we, the normal people, will have to pay for all of this one way or another. Sucks. That's the country we're living, and maybe that's why crypto is going up, because people is like, everything's BS. Crypto, at least it's transparent, right? Let me know what you guys think. Comments in the video in the comments below. I'll see you guys in the next video.